Hello, everyone. I'm Sean Hewitt, and I'm the co-founder and CEO of Wavy. We are building the platform that empowers people leaders to create amazing company culture wherever their teams are located. I think we all know that the future of work is more remote, hybrid, and distributed than ever before. While this was accelerated by COVID-19 and the massive shift to work from home, it's something that's staying long-term because of employee expectations. People used to choose where they work, and that's where they live. Today, people choose where they live and they work wherever they want. And that's the talent pool that high growth and big tech companies are facing. That's something that should be celebrated, this newfound flexibility. But it comes with its challenges. Company culture has historically been anchored in a physical space. The more distributed a team becomes, the harder it becomes for people leaders to create, manage, and sustain company culture. It leads to challenges like lack of connection, decreased morale, and increased burnout, all things that are detrimental to your bottom line. And that's why teams need a solution, one that helps them bring their teams together through shared experiences, that helps distributed employees build meaningful connections and relationships, that improves happiness and satisfaction, and ultimately increases retention over time. This is exactly why we're building Wavy. We've already started with our experiences marketplace and event dashboard. We launched and pivoted into this space to help remote teams come together through shared virtual experiences that are actually fun. Since May of 2020, we've booked over $630K in revenue, and we're just getting started. We really view our start in virtual experiences as a stepping stone to where we're going next. We've worked with over 90 tech and enterprise clients and have fantastic results. Our satisfaction rating, participation, and connection rate are all well above 90%, and our repeat booking rate is growing over time. We're really proud to be working in partnership with brands that are leading the way in a digital by default and remote first future. I'm going to stay on this slide for a second because it's why we exist. We're a client-first company, and over the past year, we've noticed a massive problem. Yes, we can build a marketplace that gives them things to do and bookable experiences, but there's a massive gap when it comes to the strategy, planning, management, and insights on company culture. Typically, it's an office manager who's planning these initiatives and says, well, I like cocktail making, so that's what we're going to do. But companies need to spend more time, energy, and resources than ever on people and culture, and a new solution is needed when it comes to managing and activating their culture initiatives. We are building a solution that gives people leaders the tools and technology they need to plan, manage, review, and improve their culture programs over time. Not just company-wide, but also that empowers team leaders across different departments to activate on these goals and improve the employee experience too. With Wavy, our clients will be able to plan a culture calendar that's diverse and inclusive, that's collaborative with anyone who's a stakeholder for culture in their organization. They'll be able to plug and play options from our growing marketplace. We're expanding beyond virtual into asynchronous, hybrid, gifting, and in-person. And at a glance, gain visibility into how often people are gathering, what experiences and categories are performing best, where there are gaps, and how they could course correct and improve over time. We serve up data on connection scores, happiness, and participation, and really view Wavy as the leading indicator for how employee engagement and culture is going across your distributed workforce. Our business model is subscription as a service. Clients subscribe to our culture platform starting at $50 per admin per month, and then upgrade to add an experiences plan. This is based on team size, engagement goals, and what they've planned in their culture calendar. We have aggressive goals for growth, and we're well on our way to our goal of $1 million in revenue this year. We have 313K booked in revenue and an additional 250K, with a key focus on expanding our current client accounts. We're transitioning from a transactional bookable events model to a long-term subscription program. In 2022, our goal is to have over 75% of our revenue from SaaS subscription and to have an annual recurring revenue average of 37K across our clients. The market that we're targeting is the team building industry in Canada and the US, and our buyer is the VP of People and Culture, typically in high growth tech companies with over 100 distributed employees. They are spending, and this is conservative, somewhere between $200 to $400 per employee per year just on team building. They have more budget, and that budget's growing when it comes to other pillars of culture, like health and wellness, DE&I, learning and development, all pillars that we're excited to expand to beyond team building. And when we look at the competitive landscape, we see a big gap. There are marketplaces that offer team building experiences, but this area around culture activation and culture management is a bit of a black hole. We are building the first platform that gives insights into how company culture initiatives and experiences are impacting your bottom line. What really sets Wavy apart is our focus on purpose-driven initiatives and experiences, long-term value for our clients, and supporting our platform with a multi-channel marketplace to choose from. Our team could not be more passionate about this space. My co-founders and I didn't start Wavy as a result of the pandemic. We came together through our shared mission of helping people build relationships through experiences. And that's something that still holds true despite pivoting in 2020. We have a great background in tech, enterprise, and hospitality. And I spent close to 4 years at Nudge, which is an employee engagement solution. And we have advisors from there today. So we definitely have the background and expertise, and most importantly, passion for this space. And we've been growing organically since May 2020. We've been able to bootstrap and grow our team to 10 people and grow our client base to close to 100. But we really feel we're in a position to grow. We have a great product roadmap and vision, fantastic clients who are growing with us, and we're really ready to launch our SaaS platform, expand our marketplace, and grow our team to over 20 people in the next year. With our $1.25 million seed round, we'll reach over $4 million of revenue, recurring revenue, in 2022 with our subscription client base of over 200 brands. We are looking for strategic investors to join us and come on board for this journey and helping companies create amazing culture wherever their people are located. Thank you so much for having me. I am looking forward to diving into questions, and I have additional resources as well.
Thanks, Sean. That was fantastic.
Thank you.
AJ, you can kick it off.
Hi, Sean. Sean,
Hi.
so, firstly, I think it's phenomenal because culture is so important to companies. Most people don't understand it, but, culture is what keeps employees there at 6 p.m. and 8 p.m. when they need to handle a situation, or versus bolt out at 4:30 in the afternoon, right? So very, very important stuff. Now, what are the key hurdles that you're noticing in your growth, right? Like you've grown pretty significantly. I see your revenue and you're profitable too. What is the raise going to go towards, right? What are the key hurdles? What is the raised money going to go towards?
That's a great question. So, we were profitable in 2020. In 2021, we're intentionally being not profitable by really leaning into growth and building out our team so that we can build our SaaS platform and start working on paid growth initiatives. But our key hurdles right now are that we are under-resourced to take advantage of the opportunity in front of us. All of our growth, everything we've done has been organic. It's been inbound, it's been from referral clients. And since launching, we've had this feeling of just trying to keep up and hiring out of necessity. Now that we've validated this solution and really have our vision and plan for what's next, we're ready to get much more intentional, much more aggressive, and scale faster than we have in the past year. So the majority of our round will be invested into people, into building out the tech and product side of our team, as well as sales and client success. And really what we're planning to achieve with that is launching and really scaling our SaaS platform, expanding our marketplace. We're starting to bring in key partners so that we can serve a lot more people and really scale up in revenue and client base.
So can I be a little bit stickler in terms of asking that portion again? Can you give us a rough divide between the tech allocation of the 1.25 that you're raising versus the sales and business development portion of it?
Yes, I could. So in the 1 point, it's a bit of a hard question to answer because we are revenue generating. So we're also looking at conservatively based on revenue, being able to reinvest close to $400K into our business this year and 1.2 million in our business next year. So it really is a master budget and growth plan, and having a capital injection is part of that spending plan.
So if we go deeper dive into due diligence with you at that point, you'll have more clarity at that point?
Yeah, absolutely. I have a full breakdown of budget based on every role and hiring plan where we're looking to bring in investment and growth and operations. I'd be happy.
That's good. Thank you so much. Yeah, I'll release the time to the next investor. Thank you.
Thanks, AJ. Maria?
Yeah, I want to get a better feel for, I guess, your future plans. When you're thinking about growth, what big company is going to hate you like 5-10 years down the line?
Is going to hate us?
Yeah.
That's a great question. I feel like I'm more like partnership and friendship driven than hate, but really the sectors we're interested in as we continue to grow is looking at the HRIS and performance management space. Not necessarily to scare them, but hopefully to collaborate and grow with them. In performance management, it's companies like Culture Amp, Office Vibes, Lattice. In HRS, it's Workday, Humi, Bamboo HR. We see Wavy as a tool that can help companies get more out of their investment in these platforms. And ultimately, our data will be leading indicators for the data collected through these platforms. So lots of exciting integration potential and causation and correlation between the activity on Wavy and what's happening in these platforms. But I've included some of these brands below: Salesforce/Slack, Workday, Culture Amp, Bamboo HR. I could foresee them being scared enough about Wavy to bring us in for more than just channel partnership. So that's what we're looking at in terms of future acquisition.
Great. Thanks, Sean.
Thanks, Maria. Terry?
So you are raising 1.25 million. I just wanted to get my head around a little bit more about how you came to the $7 million cap. I find this really interesting, and I'm thinking, when I saw the presentation, I can just picture certain investors within my own group who'd be, find this enticing. But aside from that, if you could give us a little bit more information on what your corporate, your ownership and everything else and your shareholders, that would be very helpful.
Yeah, for sure. So we came to the decision of raising 1.25 million by looking at our growth targets for the next 2 years, what we'll need to spend on people, technology, and growth in order to get there, and what our profit margin will be from our different revenue streams. So looking at our total budget, the spend is a mix of our own revenue and reinvesting that in the business, as well as bringing in some strategic investors to help scale up this growth. In terms of the valuation, we work with a fractional CFO, done lots of benchmarking with other companies in the space at similar stages. And it's a multiple on our revenue goal for this year, with a big focus on having the majority of our revenue come from subscription and recurring. Right now, we're at 50% of our 2021 revenue from repeat business, and that's only continuing to grow. In terms of ownership, we've done one family, friends, and angel round in 2019. We raised 160K. That was on a 3 million Canadian cap and a 18% discount. We actually have a couple of our investors from that round committed to reinvest in this round. My co-founders and I are equal owners in the company, and I also have a pro forma cap table that's available in the due diligence folder.
Excellent. Thank you.
Thanks, Terry. Jen?
Yeah, I definitely agree with the sentiment that culture is very important to a company, and if you move the needle there and increase satisfaction, you get more retention. What I'm curious about is, how do you measure that? You mentioned a couple of different metrics, but how do your customers measure whether or not the culture is improving, and how do you demonstrate that to them?
Yeah, that's a great question. I think it's one that keeps us up at night. We're pretty dorky, pretty obsessed with the insights analytics side of this. The majority of our clients, the majority of players in the space measure culture and engagement through lagging indicators right now. End of the quarter, end of the year, I check out my culture amp and see, oh, morale is low. And it's through pulse surveys and performance management and feedback. I think there's a pretty big gap because companies are spending more and more on company culture initiatives, but have no central place to manage, gain visibility into it, and measure how these things are impacting performance. So, today we're surfacing insights on participation, engagement, how much money was spent, so ROI based on that, and then scores on connection and satisfaction. A big part of our focus on product is also bringing in a contract data scientist and really diving into R&D on how we can look at correlation and causation of our data set and the ones that are being measured in HRIS and performance management tools. This is an approach that we actually used at Nudge as we were building out impact and ROI, and that they're helping us develop at Wavy. So with our subscription clients, for example, we're diving into what are their top OKRs or KPIs when it comes to culture and employee engagement. Where are they measuring that? So, for example, Lupio's is one of theirs is their Glassdoor rating, and then looking at the impact of Wavy programs over time and whether that's influenced indicators like a Glassdoor rating or Office-wide happiness score. This is what we really want to dive deeper into next year. So it's not only the metrics that we're serving up here, but we can go the next steps to prove ROI on bottom line, like employee overall satisfaction, Glassdoor ratings, retention, turnover, those sorts of metrics.
Thank you. Thank you to Sean. Amazing job.